There are moments when institutional developments move from quiet legislative chambers into the open market, marking a fundamental pivot in how digital assets are regulated. That is precisely the setup we are observing right now. Behind the political noise, structural progress is accelerating, progress that could redefine regulatory standards across the entire industry. While many market participants remain focused on short-term price fluctuations, analyzing these policy shifts reveals where the multi-year foundation is being laid. Before we unpack these legislative developments together, make sure to join our community. Subscribe to Crypto 101 Central, because documenting these macro transitions step by step is how we stay ahead of market trends. And tap that notification bell so you receive every update as these regulatory frameworks unfold. Welcome back to Crypto 101 Central. Let's examine the primary catalyst. Reports indicate that the White House has agreed on an ethics package integrated into the Crypto Clarity Act. For months, one of the primary sticking points preventing a full Senate vote was the demand for comprehensive conflict of interest and disclosure safeguards. Watching those political hurdles begin to clear marks a significant step toward definitive legislative ground. According to reporting by financial journalist Eleanor Terrett, the White House finalized the ethics framework and transmitted the revised statutory language to key Senate Republicans. The updated provisions reportedly include enhanced investor protections, expanded financial disclosures, and a centralized enforcement mandate under the Department of Justice, rather than a fragmented approach across individual state attorneys general. Following these reports, U.S. Treasury Secretary Scott Bessent noted publicly that the Crypto Clarity Act has reached the one-yard line, signaling that final legislative negotiations are nearing completion ahead of upcoming congressional deadlines. Prediction markets have responded accordingly, with passage odds climbing past 50% as expectations build around a Senate vote before the August recess. The core debate among lawmakers centered on establishing clear ethics rules regarding digital asset holdings for public officials. The proposed consensus language addresses those conflict of interest concerns, creating a bipartisan path forward. Senator Kevin Cramer highlighted the operational importance of centralizing federal oversight within the Department of Justice, noting that a uniform federal framework avoids the compliance chaos of 50 conflicting state-level interpretations. Specific technical discussions remain active, particularly regarding precise definitions of decentralization under securities intermediary rules. How these definitions are codified will directly determine the compliance framework for decentralized protocols and market infrastructure over the coming decade. If this breakdown gives you a clearer view of the regulatory landscape, take a second to hit that like button. It helps Crypto 101 Central reach more analytical investors looking for grounded market decodes. Timing remains a critical factor. With a limited number of working sessions remaining before the Senate's August recess, legislative leaders face a tight window to bring the bill to the floor for a final vote. To put the potential impact into perspective, the broader digital asset market currently holds several $100 billion in stablecoins and tokenized assets. By comparison, a single traditional retail platform like Robinhood holds roughly $400 billion in total customer assets. That structural gap highlights how much institutional capital remains on the sidelines, waiting for legal certainty before entering the ecosystem. Industry leaders, including the leadership at Anchorage Digital, have noted that while previous legislation like the Genius Act established the regulatory framework for USD-backed payment stablecoins, the Crypto Clarity Act provides the broader market rails. It grants banks, institutional broker-dealers, and payment networks the long-term legal clarity required to deploy capital and build multi-decade infrastructure. Without that legal clarity, institutions build temporary solutions. With it, they construct permanent market infrastructure. Globally, regulatory momentum is accelerating. Nations like Russia have already enacted comprehensive digital asset regulatory frameworks, reinforcing that global financial hubs are moving swiftly to establish market guidelines. Simultaneously, broader macroeconomic and geopolitical uncertainties, including geopolitical tensions in the Middle East, continue to exert short-term pressure across all risk assets. Despite these macro headwinds, Bitcoin has shown technical resilience, consolidating in the upper $60,000 range. From a technical perspective, holding above key structural thresholds near the low $70,000 region would signal a definitive shift in market conviction. On higher timeframes, technical indicators are displaying rare signals. A third weekly bullish divergence pattern has formed, accompanied by supply in profit metrics that historically align with late-stage accumulation zones. While past patterns do not guarantee future outcomes, they provide valuable historical context for evaluating market risk. If the Genius Act laid the foundation for stablecoins, passing the Crypto Clarity Act represents the final step toward full institutional integration. What is your take on the legislative timeline? Do you expect the Senate to finalize the Crypto Clarity Act before the August recess, or will negotiations extend into the fall? Share your analysis in the comments below. If today's video provided valuable perspective, subscribe to Crypto 101 Central and turn on that notification bell. Be sure to explore our previous market decodes to stay fully informed on institutional flows and macro cycles. As always, this channel documents, you decide.